Hello, this is Philip at the Laptop Trader channel again on YouTube. Welcome to our community. I'm just here to share my experience and give back one video at a time. We're going to cover market cycles, technical analysis, stocks, ETFs, trade entry, trade management, risk management, and how to create confidence by putting the odds in your favor. Good luck to traders out there. My contact is laptoptraderphil@gmail.com. Caution. Most stock traders lose money, so please protect yourself at all times. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. This channel is for education purposes only. Here's our agenda this month. I'm going to talk quickly about preserving capital through tough investing or trading environments. Markets change and we must adapt to that environment, like in December of 2024. Then we're going to do a major ETF market index review going into here in the second week of February. I'm going to review 3 open trades that I have right now. I've got 3 new trade ideas for you guys to consider if you're interested in those. I also have an example of when to get out of a trade, and it just shows what we don't want to see on a chart. I'm also going to have a forecast for 2025 using charts and market stages. The market has been volatile so far, but improving. And then stick around until the end for a few bonus charts and a quick look at how to see what holdings are in an ETF fund. So get something to drink, use the bathroom, push pause. But this is going to be probably 45 minutes to an hour video. Lots of charts to get through. So hopefully you guys appreciate the information here. So obviously the market sold off pretty good in December. I had a rough December, but I survived December's volatility. I only made $20 for the month trading. Now I still have a full-time job. I still work crazy hours. But for me, that was a win. It may not seem like a win, but at least I didn't lose money because I had my stops in place. I had money management in place. But because I preserved capital in that dangerous environment, I was able to survive and live to fight another day. And now through January into February, now I have an open gain on the same size account of $260 through January into February. So the markets have started to turn around a little bit just based on what I'm seeing with individual stocks. And I would compare December to maybe like driving through a winter storm. You know, it's very dangerous out. Some people don't want to slow down, but the danger is always there when you're driving, even if you're out driving on a clear sunny day. There's still accidents that happen on those days too. So you protect yourself at all times and if you're going to trade individual stocks. But currently I have 10 open trades. That should say 4. Actually, these red on the spreadsheet, the lines in red are closed trades or trades that stopped out. So that's all I'm showing there. But here I just clicked on add up the P&L, and that's what the P&L is over that last couple months. So not a huge win, but we survived that dangerous December. And here's just a picture of that December volatility. We had a big, wide range, red candle, kind of igniting this volatility. So that red candle spelled trouble. I still traded through all this, trading individual stocks, and you can just see the range back and forth. That's a huge range for an index. And then into January, we actually moved up out of this range, and now we've created kind of a smaller range here, okay? We also have a higher low pivot compared to this area back here. And you can see the candle sizes are starting to decrease versus these huge candles. So that's pretty wild December and even January. But now we're starting to kind of move up out of this area. If prices continue higher over this resistance area, I would expect the markets to continue higher. This is just a longer term chart, weekly chart, and you can see that pullback over the last 5-6 weeks, and then we kind of reverse course, and now we're starting to build some support here over these last 4 weeks, higher support. So I think that looks good for stocks going forward. On the monthly chart, it doesn't look like much at all. This December sell-off doesn't look like hardly anything, just a little red candle. So we're still in a stage 2 monthly uptrend on the S&P 500. So that's that. That gives us a little bit of a forecast for the future. NASDAQ was a very similar story. It actually made a new high in December, but left a topping tail, and now January is kind of an inside month, and now it looks like February is kind of resuming this overall stage uptrend for the QQQ NASDAQ index. And then the Russell 2000, which has a lot more stocks but a lot smaller companies. I'm just showing here this resistance line across the top of these candles. We broke out from that resistance area here early last year. Had a decent year for small cap stocks, not great, but this index made a high in November, completely gave back all those gains in December, is now consolidating towards the bottom of this red candle. So this could actually go either way. If price breaks below these candles, you could see more selling in small cap stocks. If price continues to push up, let's say it gets halfway up this red candle, I would expect prices to continue higher for small cap stocks, or at least stabilize. So that's just a little bit different market versus the big market. And then Dow Jones Industrials, symbol DIA, we had this nice breakout in November, again sold off in December, but it's kind of recovered since then. So this monthly chart looks positive for the Dow Jones stocks. The transportation average sold off even harder than the others in December, but is slowly recovering now for transportation companies. This one, I'm just showing a stock I'm currently in. This is a monthly chart, so we can see the stage 2 uptrend. I entered here after this move up and pullback, kind of a buy setup. And so this is a positive trade for me right now. I've got a target on this of 140. That's symbol CAH for Cardinal Health. So that's an open trade. That looks good. DoorDash, symbol dash. Another open trade. You can see the nice, very clearly, you can see the stages on this stock. From IPO through a stage 4 sell-off and back into this uptrend. I entered here entered in January over this red bar in December. So you can just see how the market sell-off affects different stocks in different ways. It didn't affect DoorDash that much. And so we just made a new high here in February. I got a target of at least 250 on DoorDash. Dropbox is another one that it's actually in a huge trading range over the last 3 years, but it's consistently been moving up for the last 6-8 months. It's probably going to make a new high here in February. Target of 35 on Dropbox. So that's 3 open trades. I've got here an example of what you don't want to see if you're in a trade or you're considering a trade, and that is Datadog company, symbol DDOG. You can just see here this resistance area, and then we can see this break over that resistance area and then a failure. So this is what is called a break and fail or a breakout failure. So break and fail or a breakout failure. That's where a stock breaks out over an area and should continue higher. And then this one initially did, but then has been selling off over the last 3 months, and it's given back almost all of that gain. So that's where it moves up like 100%, and it's moved back like 95%. That's not what you want to see, and you don't want to see increasing volume on that pullback. So that is an example of what we do not want, okay? And here is a weekly 2-year chart of the same stock, showing that in a little more detail, where we broke out, made a new high, and then started selling off, and then it looked like it was going to turn back up, and now we've got a wide range red candle this week, breaking that support under these candles, and that looks like again, more selling ahead for Datadog. So that's something, if you're in a stock like that, or if you see that, that's not something you want to see if you're going long. Now, if you're a short seller, that's pretty much exactly what you want to see. Uber is one that, just a couple things on Uber. As far as this is also an open trade for me. But here, the safest entry on this chart is back here after the 3-month pullback, and then a green wide range igniting candle right there. You can see it kind of moved up, pulled back in a what I would call a sequential way or a controlled fashion. Nothing too crazy, no big candles, and then it ignites for the next move higher. So that was a very safe entry for Uber, high probability entry, I should say. And you can see the volume too supporting that move. Then over the next 10, 12 months, it's just kind of been in this range, back and forth. Hit the bottom of the price came down to the bottom of the range, and now it's turned back up in a fairly strong way on earnings. So I like that too. So we've got volume supporting that move up on earnings. February demand for Uber is very strong. The wide green candle after December and January sell-off. It kind of looks like that 3-bar turn, which I like to see. Not in the greatest spot. This is a much better area here. But notice this bottoming tail candle here. So there's demand at that price, and that price kind of matches up with this month's low. So you can just kind of see that support right through there. So I like Uber going forward for 2025. VF Corp is also a pretty good idea for you guys. Not the fastest moving stock, but it's clearly in an early stage 2 with a void up here or an open space for price to move up into. So a void is an area where there is insignificant resistance because everyone who wanted to sell their shares has already done so, because we can see that, right? There's been steady selling for a couple years on this company. Well, this creates a lack of supply, and if demand comes in, then buyers can take over without much resistance from sellers, and price tends to move up as demand for this company or this stock increases. So, just basic supply and demand, right? More demand and less supply equals higher prices. This is how the market really works. Yes, events such as earnings or fundamental news or general news can and do affect investors' decisions, but supply and demand is the key to understanding markets. So just think of when people panicked during the COVID pandemic and there was a toilet paper shortage causing higher prices. Remember that? How people were going nuts over just toilet paper? Well, that sent toilet paper prices kind of shooting up higher to the point where some people couldn't afford it, which was kind of weird. So, but we never know how high price will go. But using the stage analysis, and supply and demand, this can put us on the right side of a trend. We simply have no guarantees, so use risk management and position sizing to protect your capital. But we can see if we get on the right side of this trend, it's a higher probability that we'll make money instead of losing money. Other thing interesting about this chart is as prices slowly moved up, the volume profile has slowly moved down, indicating, a lack of supply and an increase in demand. So that's the idea for you guys. Here is a ETF idea for you, symbol block, BLOK. It just represents the Transformational Data Sharing Amplify ETF. So we can clearly see the stages here, right? 2, 3, stage 4. Then we get this bottoming pattern. And then we get this uptrending stage 2. We had kind of this break in November, sold off, on a significant way in December. I would say that's about a 75% sell-off. Now reverse course in January, and looks like we've got a higher low and looks like going to be a higher high versus this candle in February. So this looks positive, like that's going to continue to move higher. So that's another possible idea for you guys. Here is a chart of Bitcoin. So we're just going to review now some general market ETFs and some general information. And what this does for me is it gives me a sense of direction of market, which sectors are stronger or weaker, what's already happened, and what we can kind of look for the rest of the year. So Bitcoin is still extremely strong, right? We had this stage here, came up into a range and then break out of that range. We've had new, higher highs for December and January. Now February looks like there's a little bit of selling pressure, but that so far has not been supported by volume. So Bitcoin trading up there near all-time highs. That looks good for Bitcoin. The S&P 500 we already reviewed, but that on a monthly basis looks higher. Just made a new high in February, so that trend is still intact as far as the uptrend. NASDAQ index, again, looks higher. Made a new high in December. January was kind of an inside month, and now it looks like that this candle looks like there's more buying pressure in February, so that looks positive for the NASDAQ going forward this year. And the equally weighted NASDAQ ETF, where they give an equal weighting to each company within this fund, is just made a new high here in February. So that tells me that some of the companies within the NASDAQ that are less well known versus companies like, Netflix and Meta and NVIDIA, these smaller companies are starting to perform also. So that looks positive for that fund. This is another monthly chart of IWM. This looks a little bit different than the other ones. Certainly not as strong as the NASDAQ or the S&P 500, but clearly a correction again in December, and we're just kind of going sideways here in January and February. So this could go either way. If it goes up, I would expect higher prices. If it kind of breaks this low of this candle, I would expect some selling to come into that ETF. The Dow Industrials, again, made a new high but sold off in December. Now it's kind of reverse course. It looks like there's still some buying pressure for that index going forward. So that looks positive for the Dow Jones Industrials. And the Transportation Average ETF, symbol IYT, this is another one that I tracked. You can see here this kind of line of resistance. We broke that, made a new high in November, sold off in a really hard way in December, more than 100% retracement. Had some buying pressure in January, and now it looks like the buyers have continued to try to push prices back up here in February. So that actually looks positive going forward for transports. Now this is kind of a measure of volatility. I don't really use it that much, but I don't really find it that useful myself. But there was a spike back in the summer of volatility based on news events. And then it just kind of went sideways. There's a little bit of a spike in December, and then it's been sideways. So volatility right now is at a level that I would categorize as relatively normal to a lower level of volatility. Over 20 would be elevated. So right now, this index, which isn't, you don't trade it, it's just something to watch, is at 14.77. So that's relatively low overall market volatility. Of course, things can change on news and other events, but that's where we're at right now. And I think that's significant too, just because we're kind of like in earnings season. So for that to be that low in earnings season after that December sell-off, I think it's actually I think that's a positive sign going forward. Now we're going to look at 11 sectors. This is the energy sector, is tracked by symbol XLE, and this has been basically a sideways market for over 2 years, almost 3 years in energy. It followed the market lower in December, tried to reverse course in January, not much there, and then February just a little bit higher. If this closes above these bars here in February, I would expect higher prices for energy stocks. If it goes lower or stays sideways, then that could just mean a continued sideways trend in energy. So that's just kind of a neutral chart in my opinion at this time. Energy, I don't see anything really standing out to me as far as this year, but things could change, so that's just something to watch. Now, one thing that's interesting is maybe you work in the energy sector or you have information about the energy sector. That's something that could really work in your favor, because after prices have consolidated, for this long, usually, markets break one way or the other. So sometimes, if you have some information on that sector, that's something that can really help you choose, go or no go on an energy sector or energy company investment. Financial sector looks very positive, just is making a new high here in February. Kind of shrugged off that December selling. Where we get a green bar, a red bar, and then a green bar. I call that a 3-bar sandwich. And it could be red, green, red too, either way. But this generally means higher prices for financial sector and financial companies like banks and other people in that financial space. So that looks bullish for XLF. Next one on the list is the consumer discretionary sector, symbol XLY. This is still clear stage 2 uptrend. We had a top and tail in December, kind of an inside candle there for January. Now another inside candle in February. So far, not much movement in February on the consumer discretionaries. So that could go either way. Right now, it's, I would say, leaning bullish as it's consolidating here towards the highs. But that would be something to watch for consumer discretionary companies. XLV is probably one of the weaker sectors. It's been selling off since October of last year. It had this turnaround in January, but right now it's looking like it's almost looking like a 3-bar sandwich the other way so far. If this closes down here, I would expect prices to go lower for healthcare companies. If it stays up here like this and starts to move higher in March, then I would expect a positive result for healthcare this year. But right now, it's pretty much kind of a sideways, non-directional forecast for healthcare. Technology, which is generally considered a growth area, made a new high in January. How about that? Didn't sell off much at all in December. Makes a new high in January. Now it's put in a nice, what I would call a gap down and reversal candle here in February. So that looks very positive for growth stocks and technology stocks in general. On technology symbol XLK. So that looks very positive for 2025. Utilities had a long period of not much going on, but came to life in 2024 and have pulled back to an interesting area here in January and February. So if this closes and gives us like this 3-bar turn here and closes towards the top by that red candle, that would be very positive for utilities companies' prices going forward. If it doesn't, then we just have to wait and see if that goes sideways or the other way. Right now, that looks pretty bullish. Industrials closely related to the Dow Jones Index. I would say still an uptrend, mildly bullish on the industrials. Materials, I would say not as bullish after we had that strong sell-off in December. So this has just been a sideways trend for the most part. It looked good until December. Now it's kind of got damaged. Prices are starting to recover around half of that candle. If prices continue higher in February and get towards the top of that candle, then yeah, I would say I'd be much more positive on the materials sector, things like lumber, steel, plastics, stuff like that. So that's more of a defensive area. Communications, no doubt the winner over the last 2 years. Make a new high in February, made a new high in January. This was actually a new high in December too, even though it left that topping tail. So this is just continually putting in new highs on communications companies. So that's until that changes, it looks like higher prices. Consumer staples. The companies within this sector have not done very well over the past couple of years. Even though this sector looks sideways for the most part, the companies within that have been selling off pretty hard. So, this is a situation where we had the selling in December, a bottoming tail candle in January. Now, so far for February, it's green. If this closes up here, that would be kind of that 3-bar turn, add a moving average, and look for prices to continue higher, which would then lead me to look for, opportunities within the consumer staple sector, symbol XLP. If not, if this continues to meander around here or even leave a topping tail, then that does not look good for consumer staples companies. So that's kind of a neutral chart right now. Real estate also coming out of this bottoming trend in 2024, but then sold off in December. This is, again, an area, maybe real estate companies very well. Maybe you work for a REIT or something like that, but this remains to be seen whether this can recover in a strong enough way to push prices higher. But so far, it looks like we had a higher low. If this develops into a significant higher low over the next month or two, then yes, I would be interested in real estate stocks and real estate companies and or REITs, which stands for Real Estate Investment Trusts. So that's that for real estate. Now let's talk quickly about interest rates. So interest rates over the past several months have slowly begun to drift lower. I would say that's positive for consumers in general and for companies in general that use credit. So this represents the 13-week Treasury bill. So that's very short-term. Interest rates have slowly come down. When we look at the 10-year Treasury note over a longer period of time, we made a high in November 23, and then since then, kind of just drifting lower. We made actually a move up into the end of the year, and now they've slowly started to roll over again. So if this continues along this path and interest rates continue to move lower, I think that's positive for stocks. and positive for consumers and businesses that use credit in general. But right now it's a sideways trend. Looks like a stage 3 overall. But remember, interest rates is not something that moves very fast. So it could take months for this to play out. So that's not one of those charts you really trade. It's just something to consider when investing in stocks, because generally stocks don't like higher interest rates. I believe, okay, so this is another idea, kind of a bonus idea. Symbol bots, which is an artificial intelligence ETF. To me, this looks quite bullish, right? It kind of, see that stage 4, moved up out of that in stage 2, gave us a little buy set up here, and then since that time has been moving higher, even this month where there was some significant selling and volatility increased and the range of price increased, it left a bottoming tail. Next month, another bottoming tail. And now we kind of have this red bar in the middle kind of being ignored, right? So this looks higher to me. I would have a target on that of at least $40. Again, that's an ETF symbol bots, BOTZ. This is another idea. This is more of a industry within a sector. So this would be software and services, symbol XSW. You can clearly see the stages here. And we had this nice range. The prices were pretty tight. And then we had this break of that range right here at the end of last year. Now it's went sideways. So remember, most companies and sectors sold off hard for this December. This one just kind of actually made a new high and kind of stayed up here. So this is a little bit of relative strength for software and software companies, at least in that industry. So that looks positive to me going forward. So that's another area. Maybe you work in software or IT or something like that, and maybe you have some inside information that you could use your skills and your position at a company to maybe make some money on software stocks. This is oops, I didn't catch the symbol for you guys. This is symbol I believe it's FFTY. FFTY is the symbol. This stands for an ETF, which is representing what's called Investors Business Daily 50. So you can clearly see the trend here, right? Stage 4, and then into this stage 1, slightly starting to uptrend here. Very early stage 2. You can see the volume coming in. You can see a kind of igniting candle or a base and break, right? That we had the December selling, and now we've kind of returned. Buyers have stepped up. We kind of get that 3-bar turn right there. So this is one of my, I guess, better ideas because of location of price, volume. Very strong candle so far here in February, and it's an ETF. So for my investor friends out there that maybe are a little bit scared of individual stocks, this gives you exposure to to a group of stocks. And this is what that ETF tries to invest in. It just says the Innovator IBD 50 ETF seeks to track the investment results of the Investors Business Daily 50 Index. So IBD 50 is Investors Business Daily's signature investing tool, targeting companies that are generating outstanding profit growth, big sales increases, wide profit margins, and a high return on equity. So that's kind of the companies that they look to group together as a fund that you can buy yourself. You just go online through your broker and buy this ETF. I wanted to show you this too. If you don't understand ETFs very well, you can look up either at that ETF company's website as far as what is inside of that ETF. Okay, so inside an ETF is individual companies, just grouped together. On this platform, it's classified under constituents. So it's not under holdings, it's actually I had a hard time finding this when I first started using this platform, but it's listed under constituents. So you click that, and then it shows what's inside of this ETF. So in this particular one, it shows the number of holdings, 53 different companies. And within the top 10 of this ETF, 36% of the fund is in these top 10 companies. And then it shows how many assets are under management. So it's like $83 million or something like that. But this is just what you buy when you buy this ETF. You buy Doximity, which has a 4.47%. That's the largest holding in this ETF. And then it goes down from there. Palantir, 3.86%. Root, 3.70%. And on down the line, right? Him and Hers Health, Stride, Rocket Labs, Axon Enterprises, Sprout Farmers Markets, Grail, Travere Therapeutics, and then Fortinet. So you can just see they've got, the most money in this company, and then slowly it goes down until it gets down to the, company number 53. Maybe there's only 1% or something in that last company. But that's just kind of how to figure out what you're actually purchasing when you buy an ETF. You could either use a platform like this, or you could go to the ETF company's website, and you should be able to find that information. One other thing about at least this platform is you could save this as a watch list, and you could also go to what's called flip charts, and you can get a chart for each company within this ETF to see if there's any opportunities there that you may want to trade or invest in. So that's a little bit on ETFs. So that's it, guys. Thank you for supporting the Laptop Trader channel. At Laptop Trader is my handle on YouTube. If you like the content, consider subscribing and liking this video. Again, my name's Philip, and I will see you next month.